Welcome everybody, my name is Mike Hamilton from Trade the Easy Way. I'm going to try and keep this video as short as possible. So what's happening this week is the US government shutdown was finished middle of last week. So this week we've got Fed minutes, we've got the US jobs on Thursday, federal budget balance. Everything's tumbling into these markets after this incredibly long shutdown. I don't think even the shutdown back in 2019 wasn't as long as this one. So markets don't necessarily fall or get really dented by shutdowns, but longer term there is an impact. Yeah, proportion of the population would not be spending and so on. And also on the back of this we've had a rise in the dollar. So let's see where we are. You look at the Nasdaq daily. Now we've come from just above 16,000 to 26,000, 26 and a quarter. So it's not surprising we are experiencing some corrective waves. So we're just talking basic wave patterns. So this is the 50 and the 200-day average, by the way. So we had this 5 wave moves to the downside and this huge bar here which pulled back, and then we went on this lovely little run. Okay, in subsequent dips, so we dipped into the 50-day average, went on a run. Got a 3-wave correction here which may not be over yet, but we're certainly on a lot of support. If we break today's lows, then we are at least going to come and find 24,000, possibly lower. So what should you do in this market? I've been taking profits where they've been showing up. For example, taking Lyle had a big leap last week, so I sold into that leap. If you are a long-term investor as opposed to a swing trader, then you just need to manage your stops and protect your account. You could hedge, of course. One of the ways of hedging is selling indices like these, or buying dips in gold, or both, if you want to stay in the trades. Otherwise, if you are a swing trader, in other words you're taking mid-term swings in prices, then in recent weeks you should have been taking profits. Cyclically, the market tends to drift into Thanksgiving, which I think is the 26th of November, which is the same day as the UK budget. So we could still see a deeper retracement into this market, like I said, back into 24,000. And then if that happens, normally we pick up just after Thanksgiving and run into the end of the year. Okay, so the RSI was divergent up here. We had a new high in the markets and a lower high in the RSI. Now if you have MACD or some of the other oscillators, you should be looking out for that. So even the basic RSI indicator is telling you, if that's an elastic band, that's stretched to the upside. What you want to watch for is when the elastic band stretched to the downside, like here. If you want to buy at a very good price, obviously you don't buy when something's crumbling and disappearing. Buy once something's had a push up on volume, and then you buy a pullback. So that pushed up and went back before it went on this run. So let this play out and see if we come into some key support, and then if you want to hold and swing trade this, then you need to stand back and let this play out. Alright, but in the meantime, obviously we are bearish with a lot of data to come this week, including some earnings as well. That's the fear index, the volatility index. It's elevated. If this continues to go up and hits 25 plus, then be careful. That's the time to really watch out. Obviously it's elevated, so you need to be on your guard. If you think in terms of moving averages, and 50-day average is the mother of all averages, On a daily chart, all this is the FTSE daily. All the FTSE's done is reconnect the 50-day average. That's it. So we had divergence up there at the highs, a lot of resistance, 3-touch drop, and now we are we're sitting on support. Well, there's the key support right down there on that last dip. So again, RSI has come back, but could still continue lower. If we get that kind of effect over here that we saw in March, April, then obviously steer clear. There's no buy signal at the moment, and the volumes are suggesting we've still got further to go. Be careful, because if that breaks this support, then we're at least going to easily see 9,000 on the FTSE. So reason to be cautious. So stocks, this is Tate & Lyle. I talked about this, bought this, can't remember the price I got in now, but look, it's a severe drop, and you see a significant volume on Monday the 6th, drops a bit lower, but then starts to grind its way up. So when this hit the £4 mark, I got out, because we're under the 50-day average. If this is a bearish consolidation, which at the moment it looks like it is, once the market reconnects with the 50-day average, that could get another leg down. So I was swing trading this. If you are long-term investing, then keep your stop underneath that recent low, and see if this can at least get back to 450. And if it does, and if volumes do start to pick up and you get higher closes, then this could easily go to £5. But in the meantime, I am just in swing trade mode at the moment, and I would not look to buy and hold stocks like that at this stage unless I see some decent moves. I'm going to talk to you in a minute about how to watch out for bigger moves. Let's just continue to look at a few more stocks. Polar, POLR in the UK, lovely move back down here in April. So April we hit the October 23 lows, lovely double bottom, and went and surpassed the July 24 highs. So if you are a swing, there's the 200-day average down there in September. So we got another three-way move up there, and now we are correcting. If you want in on this, watch out for 495. Big dividend stock, this one. It tracks the US market very closely. So I think they're fund managers, aren't they? So these pullbacks are healthy. Watch out for key levels of support if you're in this for long term. Watch out for short term resistance if you're a swing trader. It's interesting looking at these stocks with no fibs and so on it. We're under both the averages. So we had a big swing high in EasyJet up to 515 right into August resistance, and now we are falling back again. So we've got a series of lower lows and lower highs. So be very careful with this one. If we start closing under 440, then we could go and see that £4. Because if you pin back from this, we've got a massive support level at that. Oops. Let me take that off again. You can see that £4, it was key right back in November 23. SSP, I'm taking some heat on this one. I have been scaling out stocks, but this one is, so this had a really nice move into 190, another three-wave pullback into support. I thought this 150 would hold, and here we are. We're early in this session on Tuesday the 18th, and we are coming into that 135 support. And the volume suggests this is lower. So we did have a pickup in volume as we started to hold that 150 mark, and then they just let it go. We're under the averages. Volume is bearish, so I may need to think about cutting my losses on this one. Well, I do need to think about cutting my losses on this one. I'll keep my stop out of trouble for now, but I am already taking some heat. Be careful. One thing to do in markets like this, if the markets are really bearish, watch out for stocks that hold up. Okay, BT has sold off at that double top. So we've had a 1, 2, 3, 4, 5, 1, 2, 3 wave correction. But if we start to build here, I think this is a takeover target, but I don't want to. Where's the volume on this? So the volumes are still pretty pathetic, so I'm just watching this one to see if we can dip close to the 150 mark. We're 177 right now, but I've got a very close eye on BT because I think this is a good solid cash cow. It's got problems. It's lost a lot of broadband customers because it's not been competitive on price, but overall I think this is a takeover target, and I would be interested if that starts to perk up. Right, wheat is doing well. Wheat is really picking up. Strong dollar, strong grains. Long may it continue. Alright, I'm going to leave it there. More on this later. I will do further videos later this week and update you on what I'm going to do into the autumn to give you better support. Alright, tread carefully. Bye for now.